Yep, so exactly what I said it was going to do. See, I said it was going to sell here, I was going to sell it here. When the market comes back on and target this area and see what it did, it just fell. Why does the impulse fall? Because it's looking for support and resistance. It's looking for the polarities. It's not looking for these impulse areas. So that's what the impulse area is. It's really just a fall to a support, a polarity, or a resistance, or rise to resistance. See, that's what it's doing. So the market really essentially is not about the impulse. If you want to catch the impulse, you pay attention to the polarities, to the channels, these consolidation areas, which are really support and resistance zones. I call these risk zones. And whatever's not a risk zone is a reward zone, because that's really what you're dealing with, is these risk zones. So if this looks like a really hard risk zone, then look for the next really hard risk zone, and that's what the market will go to. It will go on either side of these, and the better that you make the risk zone, the more the market will stay on either side of that risk zone definitively, without crossing it many times, and it will naturally go to the other risk zone, whatever risk zone is on that side. And so as you can see here, I had defined this before. It didn't go on this side. It stayed on this side of the risk zone, and it went to the other. And if it stays on this side, then that means that it will go to the next risk zone, which is on that side, which is this one. And that's what it did. So it hit this target, and then at this risk zone, it decided to which side it was going to go on. Obviously, it was on this side more. It was not attracted to this side anymore, and it went to the next risk zone. But it was not interested in stopping at this one, and it showed that by the impulse launching all the way to this risk zone, where it did stop for a little bit, and then decided to go to this risk zone, and then it went down. That's what I said we were before. So you can obviously tell. Where are the risk zones? The risk zones are the places that there is no impulse, right? So this is an impulse. This is an impulse. This is an impulse. This is an impulse. This is kind of like a quasi. This is like a contraction / impulse. This is really a contraction here. This is a contraction here. This is a contraction. And this is a contraction. So what it can do in the history is line it up. So so I'm targeting the next contraction. So you can see that I'm already at this contraction. So the next one after that is obviously it's this one. So or this one. Or this one. But like I said, this is kind of like a quasi, and we've already went through them, so it would either be this or this. So if I'm targeting it, then one thing I could do is I could put a buy on here, and I use this as the buy, or we can even, in fact, just move it like this, right? And like that. And put the buy in here, and then let's say I want to target this, where you can see that this risk is very big compared to this. So to make this more clear, do something like this and this. Okay, and then target, and then we've got these two right here. So obviously this is buying right here. If it goes under here, then I'll sell to here, with this as the risk, this as the reward. If it goes above this, then I will use this as the risk zone, targeting this. Or if I want to be, if I think it's going there, I can target this zone. So I can push this up a little bit, push it up to there. and then maybe lower this like that. So that looks pretty good right there, right? As long as these reward gaps are bigger than the risk zones, then the risk reward is okay, and that's tradable. So the next thing someone would do is just would have to do is watch this and trade it, and then use the adding the lots, changing the lot sizes, incrementing the lot size by 1 for each missed side until the reward gap is finished. So like I said, I was looking to sell here to here. That would have completed that completed, and now I'm looking to. I'm at this point, and so if it goes under here, then I'm going to target here as a reward. If it goes above here, then I will target here as a reward. And this is the risk. And you can see that the the risk zone in either way is smaller than the reward zone. That concludes the forecast for the next hours and today, and I will post a follow-up video with the result. So for the current trading, I am currently in this risk area, but if I can set an order, they would be pending orders.